Internet phone company Ooma making its debut as a public company Friday, and its CEO Eric Stang joins me now from the floor of the New York Stock Exchange. And Eric, welcome to the show. Congratulations.
Thank you.
All right, you're issuing 5 million shares priced at $13, so $65 million right there. The stock is lower following the debut, but where is this money going? I mean, back into research and development?
Some of it will go there. We have a tremendously large market ahead of us. Every consumer with a home phone and every small business can get a less expensive and much better phone service from us than others. And so we're excited to target that market with more effort going forward.
And that price was a little bit below your initial range of about 16 to 18 a share. So why lower the price? I mean, was it a demand issue?
You know, we had a lot of very good meetings with our new investors, and they love the story. But this is a space that we're in where some other competitors in the past have perhaps not done so well. So I think investors are a little wary, and they want us to prove to them that we can actually execute on the things we've accomplished so far,
right,
and the things we're going to do going forward.
All right, and Ooma was founded a little over 10 years ago, and while you've had impressive revenue growth, over 80% during the past 2 years, you guys aren't profitable yet. So what's the plan to get that bottom line number up?
Actually, if you look at our business the last 2 years, we ran the company pretty much at cash flow break even while we grew nicely. We did have to spend a little bit the last 6 months or so ramping up for the IPO, but we're growing nicely and not too far away from profitability. If we can continue our growth, I think we have a good outlook ahead.
All right, and you also compete with some of the bigger players out there like AT&T, Comcast, and Verizon, but how do you go up against these large companies that have so much scale?
You know, it all starts with the platform we've built and what it's capable of. Our customers love our service. They tell their friends. About 30% of our new customers come from word of mouth, actually. We've also been ranked the #1 phone service in America by Consumer Reports, and PC Magazine's readers rank our small business solution the #1 small business solution in America. So we have a lot of momentum, and we just capitalize on that and keep telling our story through our advertising and marketing.
All right, now according to your perspectives, you say you've saved customers some $700 million since you started the company back in 2003. Now you have almost 700,000 users, so tell us where this savings is coming from.
Well, you know, phone service really hasn't changed much in a long time, and traditional solutions can be $30 or $40 a month for a home consumer. It can be hundreds of dollars a month for a small business. We can drop those costs to the consumers down dramatically. In fact, we even offer free phone service for consumers who buy our Ooma Telebox. All they have to pay is taxes and fees. So it's a dramatic savings. And when you add that up across our customer base, we've saved a lot of money.
All right, and just real quick, for investors who want in on the internet telecom space, what's your advice? I mean, where do you see the industry going?
This is a massive market, and there's lots of different developments happening. But I can tell you we're the only player who's bringing both affordable and very high-quality phone service with new features people have never seen before. So from our perspective, at least, we see a lot of growth and opportunity as we tell our message.
All right, Eric Stang, we'll leave it there. CEO of Ooma, thanks very much for joining us on your IPO from the NYSE.
Thank you.
I'm Scott Gamm, and you're watching The Street.